Ladies and gentlemen, we have a stock market in absolute turmoil right now. We have Dow Jones Industrial Average down over 1,100 points. We'll talk about what's going on here, why this is happening, where the market goes from here. We'll talk about some stocks in this video here today. Some very interesting moves out there that kind of give you some tells on where this market's actually headed and where certain stocks are headed from here. So we're going to get into that at the top of this video. Then I want to react to this one, Tom Lee. This was actually from yesterday. He was talking about this is what the market looks like when it's bottoming, so I'll share some opinion perspectives on that. And then this just came out 11 minutes ago. Jensen talking about OpenClaw, the most important software release probably ever. So yeah, action-packed video here today, folks. I appreciate you joining me. If you don't mind, just smash that little like button, hit that little thumbs up icon. That's all I need from you guys. I appreciate you doing that. Make sure you subscribe to the channel. I'm trying to keep you guys up to date with everything going on out there and all the drama and everything. So yeah, make sure you're subscribed, have notifications on. Pinned comment down there today will be for a free little checklist. I'll tell you a little bit about that later in the video, okay? So right off the bat here, Dow down big. Now you got to ask yourself, okay, what is going on here? Why is a Dow down specifically so dramatically? The Nasdaq's not getting hit that bad today. Nasdaq, by the way, is down about 6% from all-time highs. So, you know, a small correction in the Nasdaq as of right now, nothing too crazy. If we talk 10% plus, then we're talking about, you know, a nice size correction here. But the Dow, 1,100 points down. What's going on? Well, let's go ahead and dive deeper. Okay, we see a problem. Do you see what I see? Look at Walmart stock. Walmart's a huge component of the Dow, and that baby's getting smacked today. That's an over 4% downward move. That's going to matter significantly to the Dow when you see Walmart stock down 4% plus, right? Also, you have some of these big healthcare-related companies like Johnson & Johnson down 3.3% here today. Merck's down 3.6%. Amgen's down over 4%. Those matter. Caterpillar, that stock's been a beast, but not today. Down 4.5%, so that's become a very big weight in the portfolio overall. So ultimately, a lot of those sorts of stocks are what's pulling that whole index down in a significant way here today. NVIDIA is not that bad. Apple, not that bad. But you know, some of these stocks getting hit when you got 4 and 5% moves down. Yeah, it's going to be tough for the Dow to have a decent day, and that's why we see the Dow down 1,100 plus points here today. But what's fascinating is, do you also see what I see? Look at some of these stocks that we've been buying the last month or two. They're doing phenomenal today. Look at ServiceNow. You wouldn't like if you would tell me ServiceNow stock's up 6%, Salesforce is up 5%. And the Dow's down 1,100 points? I'd be like, what? It doesn't even seem like that's possible. But that's what we have going on at this point in time. Like, if you're in SaaS stocks and you've been buying these recently, you're like, this is an amazing stock market. Like, this is the best stock market ever, right? Meanwhile, Dow's down 1,100 points. So, really fascinating. But keep in mind, those stocks had just been wrecked. You know, like I don't know what else to say. Like, those stocks had been counted out. I mean, as of about a week or two ago, when that whole last kind of newsletter or Substack or whatever they call it, right? When that one came out about like, and it was, you know, putting into this dark future about like everybody lose their jobs and no one needs software anymore, that seemed like the type of piece that comes out and bottoms stocks. Because it's just like, gosh, you've gone that far, you can't go any further. When we've gone that dark, there's just no need for these companies anymore. There's no need for professional workers anymore. No need for anything. It's just like, how far from reality have we gone, right? And yet another day ticks on, and another day of what? Everybody still uses all these companies, just as they have the many years in the past, and they're still signing up for them and still spending more with them. That's what we see in all the numbers. Have you seen ServiceNow's numbers? Have you seen Salesforce numbers? I go through all a list of these companies. They're all doing better than ever. They all have amazing guidance, amazing numbers, amazing business models, and life goes on. But, you know, things got very dark there for a moment, and people just threw out all these stocks, and you know, for what reason, who knows, right? But they'll give you your reasons. Look at Adobe stock here today, up about 3.5%. That one's been on a nice move, you know, past few trading days here, stock like Adobe. I mean, let's pull up a 5-day here, you know, up almost 11%. And let's pull up versus CRM, and then we'll pull up ServiceNow as well. Because these stocks, if you want to talk about showing a bottom, these stocks are definitely showing a bottom. Now, eventually, if the NASDAQ was to get hit enough, like these would probably get one last hurrah hit when it comes to these SaaS stocks. But assuming we don't get a 10% plus downward move for the NASDAQ, these stocks have already bottomed. But if all of a sudden you're going to send the NASDAQ down 10, 12, 15%, it's going to be hard to not get hit, right? But as of right now, as long as the market doesn't get hit significantly more than this, that means ServiceNow, Adobe, Salesforce, IGV in general, they've all bottomed, right? So just do keep that in mind. That's kind of what we're working with now at this point in time. TSLZ, this is my Tesla hedge that's doing pretty good today, but not like great. It's up 3%, a little over 3%, which is a good day. But given the Dow's down 1,100, I would have loved to see that one up a lot more than that. PayPal. Listen, ladies and gentlemen, something interesting's going on in PayPal. So you know what? Clear as day, in my opinion, people are buying up this stock recently, and it really has to come down to, I believe people are convinced that PayPal, because remember, this one bottomed at like $40 not that long ago, right? I believe that people are convinced PayPal is going to be bought out by somebody. And that's why we continue to see momentum in this stock. I mean, there's no way a stock like PayPal should be up today. The stock's up almost 2%. I mean, you could say with the SaaS stocks, okay, like those stocks has been dead and forgotten, and finally value investors are stepping in to buy them, right? But somebody like a PayPal, there's no way you could say, well, Dow down 1,100 points and PayPal's going to be up 2%. No way that makes sense unless people are convinced the buyout's coming, right? And so that's why I think that one continues to bid up. And it's up significantly from those lows it was at about a week or two ago, right? And so there's something likely credible going on behind the scenes. Now I understand, like, I believe it was Stripe denied the, I messed around here. I believe Stripe denied the potential buyout. But listen, that's what they're supposed to do. That's what they're supposed to do in this game, right? Like, you're supposed to deny that. But yeah, from those lows, it reached right around here. I got to take off the other PayPal here. It's up 23%. 23.23%. Michael Jordan. It's the, oh my gosh, PayPal, Michael Jordan stock. But it's fascinating, right? That's what I think's going on there. SoFi, actually, that's a surprising one. To see SoFi up on a day when the Dow's down 1,100 points, that's fascinating. ELF remains a deal. Amazon actually green today. That's a big win for Amazon. I'm surprised Win's not weaker, given all the Middle East turmoil with the Middle East property. I thought Win might see 98 this week, 97, something like that, maybe even 95. That one's actually holding up a little better than I would have anticipated. Outside of that, not too much going on there. It's a lot of these stocks that had been the rotation plays, I feel like are really getting hit hard today. Let's go ahead and take a peek at housing stocks. So Rocket getting hit hard here today. Caterpillar getting hit hard, as we spoke about. John Deere getting hit hard as well. These stocks had been beasts, though. Let's be very clear about that. Pull up a 1 year cat. Are you flipping my flapjacks? Stop it. Caterpillar's up 106% in the past year. What? No. Caterpillar? Come on, man. That's just silly. We're talking about cat here. 106% in the past year. Flipping my flapjacks. John Deere's had a decent past year. Up 25%. That's more normal, at least. Caterpillar, a double up? What? That's just insane, right? That one's due for a big pullback. I mean, what's Cat's valuation at now on this baby? And I understand there's a lot of excitement about all the data center sped, and you're going to need a lot of machines to do all that, blah, 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 right? No. Cat's trading at a 31 forward P. No bueno. Cat's not the type of stock that should usually be trading at those sorts of forward Ps, ladies and gentlemen. Cat's the type of stock that should usually be trading between about a 10 and an 18 forward P. Okay? Between about a 10 and an 18. We're talking 30 plus forward P? No way that should be happening. No. This is bad. Oh, this is no bueno. Look at this. Oh, this is one of my favorite features on the charts feature for 1000xstocks.com, right? We show you historical PEs. And look at, remember what I told you guys? What did I tell you? I said 10 to what did I say? 10 to 17, 10 to 18. And look at where CAT usually trades, right? Look where CAT usually trades. And obviously now all of a sudden the P's went insane. Look at this. Come on. Mid-30s, trailing 12-month P, that should, no. No. No bueno. No bueno. So, CAT, that's a scary stock. And if that one comes crashing down, it's going to hurt the Dow significantly. I want to find RH. RH 149. RH. Oh, man. RH is tempting me. It really is, ladies and gentlemen. RH Restoration Hardware is very, very, very tempting to me. So, obviously, numbers have been horrible out of them. But I expect a bottoming to happen and them to come back to life. It's just a question of, do I want to step in this stock? It's scary. But, I mean, to be fair, a lot of times the most money's made when you buy a stock and it's scary. And that's the thing with RH. It's like, dang, the numbers are so bad. Balance sheet's trash at RH, too. Look at what's happened to the shareholder equity. Great job, Gary Friedman. Great job, sir. Gary Friedman. Spending all that money on the buyback. I think the man's brilliant in terms of what he built with this company. The branding. I think he's brilliant. But that buyback, I told you guys years ago, dumbest thing, man. He blew so much of the money's cash on this massive buyback at a bad price and put the company's balance sheet in a horrible position. Such a bad decision, man. Such a bad decision. But anyways, it is what it is. If it wasn't for that, I would be buying RH right now because the balance sheet would be a lot stronger, so I'd feel much more comfortable buying it. But gosh, man. Gary Friedman. And so he took a lot of shares off the market when he did that buyback. Great. Okay. Look at the drop off. Like, boop. But, no bueno. Look at the current assets. Oh, it's plummeted for the company. Ooh, this might be the ugliest one yet. Look at this chart here on 1000xstocks.com for RH. Look at what happened to their cash. They used to be cash loaded. You used to be able to sleep well at night holding RH. Look at their cash level down. It's so small you can barely see it. And look at the debt load. I really want to buy it. I just don't know if I'm going to be able to. I really don't. Whirlpool's flirting at $60. That's one of those stocks that's like, is there anybody left to sell that stock? Like $60. When it comes to Whirlpool, there's another company that I expect to be bottoming here in the next, month or next few months in regards to their business model. And I expect it to get better from there. But this is another ugly, ugly situation, obviously, right? Look at the revenue, where that's trended for the company. Look at the margins. Ugh. Ugly. Look at the earnings per share. It's all over the place and it's ugly. Free cash flow is ugly. Free cash flow per share is ugly. Operating cash flow is ugly. Operating income is getting a little better for the company. That's good. Shareholder equity, definitely in a much better position than RH. So I would feel more comfortable. The thing is, I feel like RH has a lot more. As long as it can make it through this storm, get out to the other side, I feel like RH has a lot more potential upside over the next 3-5 years. I feel like our Whirlpool has less risk over the next 3 years than RH, but I feel like the upside's not as extreme. So, I don't know. We'll see what happens. Also, not a great balance sheet of this company either, by the way. But it's much better position. You can sleep better at night than certainly RH. There, okay? But that kind of covers housing stocks. Let's see retail trader investor type stocks here. So MicroStrategy getting hit a bit. 5% is not bad. Bitcoin's holding decent today. Holding decent. HIMS continues to get hit. Oh, I wonder if that one's going to break 15. That one's just been, ooh, man, it's been an ugly stock. Ugly stock. We're Robinhood. I think I saw Kathy Wood just bought a lot of shares, which means it's going lower. Coinbase down over 3% here today. Palantir getting hit a bit. Little Dingo came with the turnaround there. 5.6% up today for the Dingo. Big Tech Big tech's getting hit a bit today, but it's not that bad. It's not that bad. By the way, anything under 200 for AMD is what? Is a buy. But yeah, big tech's not getting hit that bad today. A lot of the pain's just really in the Dow, right? And so a lot of these stocks are actually, you wouldn't think it's that bad of a day out there in the market, considering the Dow's down 1,100 points here today. That's a no bueno situation. And, the big issue we have going on here, if you're wondering, we have two big issues, okay? One, look at that 10-year yield. It's going higher. No bueno. You don't want to see that. That's bad. No, no, no. 10-year goes higher. Mortgage rates go higher. Keeps the housing market dead. That's not good, right? I'm so happy I locked in like 2 weeks ago at 5.75 for my next house because, if anything, I think it might go back over 6 in regards to mortgage rates here. So that's not good. Inflation expectations are starting to go higher, which then inflation expectations start to go higher. That means people are doubting the Fed lowering rates as much as they might have anticipated as of just a few months ago. Look at GSG. This is a commodity basket index. Oh, no. Oh, no. Oh, no. Oh, no. Oh, no. Oh, gosh, no. GSG is now up almost 24% for the year. Guys, when that goes higher, that means everybody's going to be paying higher prices for stuff. That could mean electricity. That could mean gas. That could mean just everything. And if inflation expectations go higher, that could mean people get worried about the Fed not even lowering rates this year. And then if it goes bad enough, you could start worrying about, you could start actually worrying about the Fed having to raise rates again. Oh, that'd be devastating in the stock market. Absolutely obliteration. So let's hope it doesn't get that extreme, but this is not good. Oil's up 8% plus today. Ooh, somebody got a 296 GTB. Not me. But somebody got one. That's good. Rich people still being rich. IGV, but crude oil up 8%. I mean, look at the VIX here today, up 21%. Oh my gosh. But crude's just moving. Crude's now up 40+% on the year. Oh boy. That can't mean good things for gasoline prices come this summer. Even the spring. But specifically, I'm always thinking, a little further out, so I'm already thinking of summer. But yeah, that's not good. None of this is good news. 10-year going higher, bad news. GSG exploding higher, 3% moves. Insane for a day for GSG. Horrible news. Crude oil going higher, horrible news. That's bad news on bad news on bad news. So I don't have any good news for you in regards to short-term price action. Only good news I have for you guys, you know what it is? It is, well, other than SaaS stocks, those are certainly good news, right? I'm kind of happy we've been buying those. But the other good news I have for you is you get great pricing. You get better pricing to buy stocks if you're a long-term investor. If you're worrying about retiring today or tomorrow, I don't know, man. Tough times. But if you're worried about retiring 5 years from now, 10 years from now, 20 years from now, 30 years from now, you'll take stocks as cheap as you can get them, right? And so do keep that in mind. Okay, so let's go ahead. Let's react to some videos up here. First one up, Tom Lee. I'm only going to react to the Tom Lee part specifically. That's some other parts in there, but I just really want to hear from Tom Lee.
At Post 9, it's good to have you back.
Great
Your thoughts as you look at these markets. Been real interesting price action over the last couple of days. Thought our reporters set the table very well on the issues at hand that investors need to keep their eyes on. What about yours?
Yeah, I think the headlines have been scary. No one wants to see the U.S. in a conflict, but I think it's been spot on to note that markets have been taking this much better than expected. I don't think anyone can say we're bottomed yet, but this is what looks like the makings of a bottom, right? That you get bad news and the markets are taking it in stride. And more importantly, I think we've had a position reset. And so...
Oh, hold on, Tom Lee. In all due respect, sir. Listen. The market's very good. Investors, the ones that control big money, are pretty good nowadays about being able to, if they're caught off guard by something, like not have the market freak out, that initial wave, position for downside, and then cause the volatility from there, right? And you can go all the way back to the housing crisis, and there being a lot of thoughts around this, about there was huge problems in housing way before the stock market started to go down, way before the swaps started to be revalued and things like that. And there was a belief that a lot of these Wall Street funds would not allow certain products to reprice until they had positioned for that downside so they can make money on the downside as well. And then they started to reprice these things. And so sometimes this happens in the stock market where, an initial thing will kind of shock, but it's almost like they try to hold the show together. Then they position for that downside. You also see a ton of puts being bought, shorts being made, and then magically all of a sudden the market starts going down with not much new information. It's the same information, but now all of a sudden the market cares about it. It's like, whoa, thought the market didn't care about this, and now all of a sudden it cares about this. It's like, wait. We'll allow it to go down when we're positioned for it to go down. That's when it can go down, right? And so, there's always going to be a level of manipulation that happens in the market, and you have to understand that. And that's another reason why don't even focus on trading. Own great companies for the long term. You can't control whether these companies go up or down in terms of their stock price in the short term, and that's going to be what it's going to be. But focus on the long term with these companies, because playing the short term games doesn't end well.
On the other side of this, I think is going to be a lot of opportunity.
What would give you the confidence to say, that's a sign of a bottom? What do you need to see?
Well, some things, like if we go back to April, a simple thing would be the VIX making a spike to over 40. Last year was 80, but we won't get to 80. And then, of course, retracing. That would be a clean sign because that's so much de-risking. Another sign would be we get another scary headline and gold continues to sell off, and then stocks actually turn green on the day, because that means we've washed things out. I think we're pretty close.
You're watching oil as closely as everybody else is. I thought it was interesting, some of the notes today. UBS.
I'll explain in just a moment what price the VIX usually means to buy heavy versus just buy versus, you need to load the boat type situation.
We expect only minimal or a brief disruption to global energy supplies. We therefore stick with our base case that U.S. equities, will produce good gains this year. Katie Huberty over at Morgan Stanley. Recent geopolitical events unlikely to change our bullish view on equities over the next 6 to 12 months.
I think oil, we saw things that kind of made sense to me. Oil spiking on closures or potential closures of the Strait of Hormuz, but the response from Washington. And I think that's maybe more important, that I don't think Washington wants high oil prices into the midterms. And of course, it's very unpopular with Americans. It's a big burden. So I'm going to be in the camp that I'm watching the price action. I think it's encouraging that oil's not surging into the close.
Hey, part of the Huberty note focuses on the AI trade, which has been really interesting, I thought, over the last couple of days. Back, some might say, to the safe haven type price action. Look at right now. Microsoft's up, Meta's up, Amazon's up, Nvidia's traded better over the last couple of days. What do you make of that?
Well, in our view, March was the makings of a bottom because the software, the Mag 7, and the cryptos we thought were like 90% through to their winters or declines. They are outperforming, and I think that's a sign of leadership. But fundamentally, you're absolutely right. If we get global trade disruption, you still need AI, and you still need a Mag 7. So I think they're actually good fundamental stories.
There's a technical side to this story, too. Stay with me just a second, because certainly one of the key questions.
Okay, so let me explain the VIX for a moment, and when pricing's really great to buy versus okay to buy and those sorts of things, okay? So when it comes to the VIX, when you see the VIX go 25, over 25, you're usually getting pretty good pricing on stocks, and you should be buying. You see it go over 30, you need to, let's just call it, amp up the buys. You see it go over 35, you need to be buying heavy. You see it going over 40, you need to be loading the boat. You see it go over 50, you basically need to go all in the market, usually, in almost every situation. You could trace the VIX back and basically see every single time the VIX has ever gone over 50, and you should have basically been going all in. I can't think of any time period where it didn't make sense. Literally, I could show you any time period where the VIX went 50 plus, and you should have been going all in the market. You got insane steal deals. And even 40 plus, you need to just be loading the boat type situation. So Yeah, that's just always keep those numbers in mind in regards to VIX. Maybe someday that will be broken for the first time ever, but just keep in mind that would be the first time ever. It always ends up working out in the end.
Want to opine on that?
Yeah, I mean, I agree with almost everything said by both Krinsky and...
Oh, hold on.
For the U.S. economy, so that when they reopened it, stocks were rising, and then they just absolutely soared up to new highs. So that sort of told people, you know what? Wartime is not always a bad time for the markets, and certainly we're not in a World War I, World War II. Certainly, let's hope it doesn't get that way. But it had those periods, when VIX is above 20. I know Tom wants it to go above 40. That would be the spike that would probably mark the bottom. But it means there's an awful lot of hedging that is going on, a lot of risk positioning. If we get through this war with some of our objectives through, I think we're ready for a big bull market in 2026.
Want to opine on that?
Yeah, I mean, I agree with almost everything said by both Krinsky and Jeremy Siegel, that this is all the hallmarks of creating...
How dare you call him Mr. Siegel? That is the professor, Jeremy Siegel. Put some respect on his name.
Good opportunities. So I think investors do need to look beyond the headlines, maybe think 3 months, maybe even a month forward, and we just have to kind of wash through this bottom. But we already know where the leadership could be coming from. It's the software, the Mag 7s, and even the cryptos.
Professor, this...
With regard to what Tom Lee says there, listen, don't look 1 month or 3 months from now, because who knows what could happen. Market could be even messier a month from now, 3 months from now. Don't look at that. I would say focus on 3 years from now, where the market is, 5 years from now, 7 years from now, right? That we have a lot more certainty of. But what happens over the next 1 to 3 months? Dude, who knows? What happens with this whole Middle East situation? Does it get way more out of hand? Does it get more controlled? Does oil go 100? Does oil go 120? Does GSG keep flying? Does that then put those Fed in a situation where they can't cut rates this year? What does that mean for the market? Does a 10-year keep going higher so that continues to have a dead real estate market? Oh my gosh. And then could there start being so many worries about the economy because of inflation, but inflation the Fed can't control, like oil price and things like that going high? Does that also mean the Fed actually would start to cut rates because they're more worried about the economy than at that point in time than something like oil price, which they can't control? The Fed could raise rates to 1,000,000%. It doesn't mean like magically oil price is going to come down. That's not the way it works. So one of the big factors on why GSG is going so high and why you might see a lot of inflation in the numbers has to do with gasoline price. They can't affect that. But if it affected the economy negative enough, then the Fed could maybe lower rates at a faster clip than people expect. Dude, the next 1 to 3 months, who knows? Don't focus on 1 month out. Don't focus on 3 months out, because that's a mess. But do focus on 3 years from now, okay? So that's what I'll say about that, and great companies.
Tom suggesting perhaps rekindle the mega cap trade in some respects for the idea that at times of turmoil within the markets, these have tended to be a bit defensive.
Yeah, well, I remember once we thought that Apple was the big defensive stocks. When there's times of potential recession or international disturbances, really no stock is totally immune. We really need to get through this, I think, for the bull market in both segments of both the value stocks and the rotational stocks as well as the Mag 7. But, let me tell you, when you take a look at some of those Mag 7 stock like NVIDIA that selling in the low 20s, some even say lower in terms of price earnings ratio, that is an awful lot of discounting, let me tell you, for a company that has been growing 30-40% a year.
Yeah, you would agree, though, in the bigger picture, as we wind our conversation down, that energy, that complex, and oil prices are the most important thing to watch right now. Not only from a sentiment standpoint, obviously for the economic fallout perspective, and then how it relates to the Fed as well, and what its road ahead is going to be.
Yeah, and as Tom mentioned, I mean, we are coming to the midterms. And, we have had low oil and gas prices under Trump. Now, the wholesale price of gas, let me tell you, has gone up 50 cents over the last 3 days. Now, it takes about a week to work into the pump. I worked it out that if it does go up by, 50 cents, we will be in the middle of what gas was during the Biden administration, but no more Trump discount that he was counting on early on. So it's not only, a question about the Fed does and the economy. It really is going to be important for the political outlook.
Tom, you get the last word.
Yeah. Well, I'd say I think investors just need to be kind of patient, cautious, and wary, have a bit of firepower. But I think opportunities are emerging.
All right, gentlemen, I appreciate very much the conversation as always.
All right, let's run into this next one here.
Having a moment after NVIDIA's CEO Jensen Huang called it the single most important release of software probably ever. Deirdre Bosa has more. And Deirdre,
That's a big statement.
Confused. OpenClaw sounds like Claude, but it's not Claude, but it was meant to sound like Claude. But now the guy works at, OpenAI.
It started as Claudebot, so it was actually built on Claude, and then a lot of stuff happened. It was really funny how OpenAI ended up getting the guy. But anyways, it's more than just OpenClaw. It's about sort of these agents that can function on their own. And if Jensen Huang and many others in Silicon Valley that are talking about this, if they're right, then AI agents are essentially a death sentence for the internet's middlemen. Here's why. The entire internet was built for humans who search, browse, compare options, they click on ads. An agent doesn't do any of that. It already knows what you want, or it figures it out in the background. So it doesn't browse 10 hotel sites or read reviews. It goes right from prompt to transaction. It might still access that data through APIs and data sets, but it skips the front door entirely. So the winners here would be the endpoints and the pipes. That's airlines, not Expedia, hotels, not Booking.com, your bank, not the nerd wallet that sits in between. So infrastructure, too, would be winners like Stripe, Plaid, and Shopify. Yesterday, Kelly, Box CEO Aaron Levy, he told us that agents need everything that an employee needs or a human needs, email, storage, and identity. And that could actually be 100 times their existing customer base. So that's not software as a service. It's software for agents as a service and could just be a huge market. That is why Jensen Huang called OpenClaw the most important software release ever, a personal AI that runs on your machine all day without even waiting for a prompt. That creator, as you said, just got hired by OpenAI, and the momentum here is unlike anything that we've ever seen in open source. The market is starting to sniff this out as well. You've got stocks like Twilio and Shopify. These are the plumbing that agents run on. They're rebounding big over the last month, and that is helping drive the IGV back from that.
Yeah, the moral of the story is here in regards to this whole situation, right, is there's going to be new incredible opportunities opened up, right? Whenever you get a new technology like this, a lot of people look at it from the negative perspective of like, oh, this might cause this company to lose market share. It might cause these type of employees to lose their job, right? And all these sorts of things. Every new technology throughout existence always creates so many new opportunities. It's unbelievable, right? And so I always take a look at it from the optimistic perspective, because it always is the one that ends up being correct. And there's never a situation where it ends up being the pessimistic situation ever. You can study throughout all business history and all innovation over time. Every innovation that ever came out, from electricity to the light bulb to the internet to software, all these sorts of things, right? Hardware and semiconductors, they all end up creating incredible opportunities over time and way more jobs that are produced and a lot higher paying jobs than we ever seen before. Okay. I appreciate y'all for joining me as always. Hope you appreciate today's video. I got a free resource for you guys. That will be the pinned comment down there today. It looks like I think we're up to 1,000 people or so have gotten this resource so far. Basically what it is, I put this together last week for you guys. It's like a test, and basically you go through and you kind of like check no, yes, like on how many of these things and it'll give you a result on if you're kind of like just a gambler in the market, or if you're like, in a place where you still got a lot to learn, but you're on your way, you're on the right path, or if you already are like a genius in the stock market. So it's a fun little test for you guys. Make sure you enjoy that. That will be the pinned comment down there, and then you know where you actually stand in this game. Much love and have a great day.